Low-cost mortgage just saved another borrower over $25,000 in cost, and we were lower in rate. Check out this compare and save video. At Low Cost Mortgage, we are here to save you money when you buy a house or refinance a house. I'm going to show you how we just saved somebody $25,000 and we were lower in rate. Both lower in rate and cheaper. All right, so first and foremost, we're going to pull up Low Cost Mortgage. We're going to keep us on the right side. I'm going to highlight us in blue. Our interest rate, 5.75. Now, this purchase price was 1.7. Loan is just below 1.6. So we're at an interest rate of 5.7. We were against two other lenders. Here's lender number 1, okay? And I'm going to highlight them in red. And they were at an interest rate of 5.875. So, Low Cost Mortgage, 5.7. This other lender, 5.8. Now, what about the costs? Now, everybody knows when you're comparing two different lenders, you're going to compare the rate and the cost of the rate. So, if we come down to the cost of the rate, Low Cost Mortgage is $13,000 and some change. Where's this other lender? Well, let's take a look right here. I'm going to highlight that in red again. Scroll back down, and they are at $38,600 and some change. Low Cost Mortgage, 5.7, 13 grand cost. This other lender, 5.8 and $38,000 in cost. The difference is over $25,000. We do this all the time. We save people money all the time on mortgage loans. All it takes is for you to actually think about things a little bit, try to compare a few different lenders, and do it the correct way. I want to show you where the other lender was for cost. This is going to blow your mind. The other lender was at $50,000 in points. Yeah. Hi, ridiculous. Okay, so this is how you compare. Okay, I'm going to turn on a pen here so you can actually see a pen. And we're going to draw in green. We're going to draw in green, and we're going to make that line thick enough so you can see it. Okay, this is how you compare two different lenders. What you're going to do is you're going to go up, you're going to look at the rate. In this case, 5.7. Hold on, we got to turn on the draw tool, and there we go. Now we're drawing. Okay, so in this case, 5.7 for Low Cost Mortgage. We're going to go up to this other lender, and the other lender is 5.8. So what you're going to want to do is make sure that you are comparing the same rate or comparable rates. 1/8 of a percentage point. It's better if you're comparing the exact same rate, because if they were at 5.7, their cost would be a lot higher. But they quoted 5.8 and we're at 5.7. So we're cheaper by 1/8. Now, we're going to go down. You can look at cash to close. We're at $154,000. They're at $227,000. Well, they have a higher cash to close because they included a cost that shouldn't be there, which is not really a big deal. Okay. How you compare is you're going to go the rate, comparable rates, and you're going to go to Block A, and Block A only. So, Low Cost Mortgage, 5.7 and $13,000. This other lender, 5.8 and $38,000. That's all you have to do to compare. That's it. Now, every other block on the loan estimate, and this is Block B through J. Let's go down through B through J, okay? Here we got left side, right side, B through J. Services you cannot shop for is B. B is appraisal, credit report, the funding fee if it's VA. In this case, this guy's disabled. This VA funding fee is not going to be there, so it's not really a big deal. So this is actually $50,000 off. So we're at $1,200 or so. They're at about $1,400 or so. But in Section B, those costs are almost always going to be identical between lenders. Lenders have no control over B for the most part. We're going to go to Section C. Section C is title insurance. Well, the lender does not affect cost on title insurance on Section C. So Section C, You don't count Section C at all. You just don't. You don't compare that. There's nothing to compare there. Section B, same thing. Not much to compare. Sometimes a credit report fee. If you look over here on the right, credit report fee. And if you look over here on the left, credit report fee. In this case, we are 136 and they're 166. Again, not much to compare there. Credit report's credit report. Doesn't matter. We're going to go in the top right corner now, and we're looking at taxes and other government fees. This is where they have another error, which is fine because everything will balance out to be the same money later. They're charging $31,000 for transfer tax, which isn't there. It's going to be zero because the seller's paying for it. But we're at $639. Guess what? They're at $648. That's the government recording fees for that county. Section E, regardless of lender, will be the same. So guess what? Section E doesn't count for comparing lenders. Prepaids. Prepaid is your homeowner's insurance for 12 months. It's also the amount of interest that you have to pay between your closing date and the end of the month. Does the lender dictate that? No, they don't. You get your own homeowner's insurance, and the number of days of prepaid interest is based on when you close. So the lender can't affect that at all. So F, we don't compare it. Okay. G, initial escrow. Typically, this will balance out to be 2 months of insurance and 2 months of taxes. Typically. Now, the numbers are going to show a little bit different, but guess what? Does the lender control that? No, they don't. It's a formula. Everybody uses the same formula. Why? Federal formula. So G cannot be compared either. That leaves us H, which is other. Well, guess what? The lender cannot control anything in H either. Title company and your own choice and the county you're in will dictate, do you have a pest inspection fee, yes or no? Also, the question is, do you want owner's extended title coverage, yes or no? And that's your choice, and that's also in the contract itself. Does the lender dictate that? No, and the title insurance cost is from title. So the lender doesn't actually compare that either. That leaves us with what? Lender credits. Lender credit is right down here. They have zero. We have zero. So if you were to compare this deal between two different lenders, okay, low cost mortgage, we're going to scroll up to the top here. Low cost mortgage, 5.7 at a cost of $13,000. This other lender, 5.8 at a cost of $38,000. Now, this is a few minutes. This few-minute video hopefully showed you how to save a lot of money by comparing lenders. You compare the rate and the cost of the rate. The rate is going to be on the top of your loan estimate. The cost of the rate is in block A, top left corner, page 2. That's all you're comparing with lenders. Everything else, none of the rest of it actually applies from lender to lender, except maybe a few dollars up or down, because almost all of it is third-party cost. If you want to save money on your mortgage when you're buying a house or refinancing a house, you probably want to give Low Cost Mortgage a call. We save people money every day. My name is Mike Florin. I'm the owner. These awards behind me are some of the awards for volume, and we sell a lot of loans. We get a lot of awards. Anyways, I'll talk to you later. Have a great day. See ya.